Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SONIC Automotive Inc. quarterly report. SONIC Automotive Inc. offers a wide range of automotive-related businesses and services through its three segments: franchise dealerships, EchoPark, and Powersports. The company's key offerings include sale of new and used cars and light trucks replacement, parts sales, vehicle maintenance and repair services, paint and collision repair services, third-party financing arrangements, extended warranties and service contracts, insurance products, aftermarket product sales. Additionally, the company operates EchoPark locations that specialize in pre-owned vehicle sales and offer third-party finance and insurance product sales. The Powersports segment sells new and used powersports vehicles, including motorcycles, personal watercraft, and all-terrain vehicles, as well as providing fixed operation services and third-party finance and insurance services. The significant increase in SONIC Automotive Inc.'s stock price over the past year can be attributed to several key factors. The company's strong Q1 2025 earnings, which saw a 49% year-over-year increase in adjusted earnings per share and a record quarterly revenue of $3.7 billion, contributed to a 6.05% surge in the stock price. Additionally, the company's strategic acquisitions and growth initiatives, such as expanding its luxury brand portfolio and modernizing its power sports business, have also positively impacted investor confidence. Furthermore, SONIC Automotive's consistent dividend increases, including a 9% hike in Q1 2025 and an overall increase of over 3% from $1.40 to $1.52 on July 25, 2025, demonstrate the company's financial health and commitment to returning value to shareholders. These positive developments have collectively fueled the substantial overall increase in SONIC Automotive Inc.'s stock price, with reports indicating a rise of up to 34.7% as of early October 2025. The primary drivers of revenue growth and decline can be identified through an analysis of various segments and factors that impact a company's financial performance. Revenue growth is primarily driven by franchise dealerships, which saw significant increases in retail new vehicles, plus 19%, fleet new vehicles, plus 17%, used vehicles, plus 14%, wholesale vehicles, plus 25%, parts, service, and collision repair, plus 11%, and finance, insurance, and other services, plus 21%. The EchoPark segment also contributed to revenue growth with increases in wholesale vehicles, plus 28%, and finance, insurance, and other services, plus 4%. On the other hand, revenue decline was observed in the EchoPark segment's used vehicle sales, minus 7%, and the Powersports segment's wholesale vehicle sales, minus 9%. Other factors that impacted revenue include cyber insurance proceeds, $40 million pre-tax benefit, dispositions of real estate, $2.3 million pre-tax gain, and a decrease in manufacturer assistance received. The company also experienced an increase in net cash provided by combined trade and non-trade floor plan financing, rising to approximately $222.1 million in the 9 months ended September 30, 2025, compared to $107.4 million in the same period last year. Overall, these factors highlight the key drivers of revenue growth and decline for the company. The company has consistently demonstrated a strong ability to generate positive operating cash flow over the past 2 years. In both 2025 and 2024, net cash provided by operating activities exceeded $1 billion, with 2025 reaching $1,447 and 2024 at $1,412. This trend is further supported by the 9-month figure for 2025, which stood at approximately $729.7 million. These numbers indicate a stable and healthy financial position for the company. The company's debt level has undergone some fluctuations, with a notable increase in current liabilities and franchise dealership segment debt, while long-term debt decreased. However, total variable rate debt remained relatively stable at $2.1 billion as of September 30, 2025. In terms of interest expenses, the company experienced mixed results. While total interest expenses increased by a small margin in some periods, they also remained relatively stable or even decreased in others. The overall change was described as slightly significant, indicating that while there were some variations, the impact on the company's financials was not substantial. Financial performance overview. The company's financial performance reveals a mixed bag of results across different segments and regions. On the positive side, franchise dealerships showed impressive growth, with revenue increases ranging from plus 17% to plus 25%. The powersports segment also performed exceptionally well, with revenue growth rates of up to plus 91%. However, some areas underperformed. The EcoPark segment experienced a decline in revenue, with a minus 4% drop overall and a more significant minus 7% decrease in used vehicles. Additionally, the wholesale vehicles segment within EcoPark saw a minus 2% decrease. These results indicate that while certain segments are thriving, others require attention to improve performance. Management's outlook on company strategy. The company's management is optimistic about its outlook, despite some challenges. They expect no significant impact from tax reforms and plan to dispose of unused real property within a year. The automotive retail industry is expected to experience a 3% to 1% decrease/increase in new vehicle volume for 2025, but this may be offset by the growing demand for electric vehicles. Management notes that the current wholesale vehicle price environment is unsustainable and will return to normalized levels over time. However, they believe that improved vehicle quality will continue to drive revenue growth, potentially offsetting losses from increased complexity and repair demands. The company's strategy focuses on adjusted EBITDA as a key metric for measuring operating performance. They also anticipate no significant changes to their cost of or access to capital over the next 12 months. Overall, management is confident in the company's ability to adapt to changing market conditions and drive long-term growth. The company has made several strategic moves through acquisitions and divestitures. Key acquisitions include RFJ Auto Partners, Inc. in 2021, as well as the purchase of 18 stores in the EcoPark segment and 14 stores in the powersports segment by September 30, 2025. On the other hand, the company has also engaged in divestitures, including dealership dispositions, facility relocations, and the sale of dealerships. These moves aim to optimize the company's operations and portfolio, allowing for greater efficiency and growth. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. Specifically, the company paid dividends totaling $-30.6 million and $-35.8 million, as well as distributing $0.38 per share on October 15, 2025. Additionally, the company repurchased approximately 0.7 million shares for $44.1 million in the 9 months ended September 30, 2025. Concerns over inventory buildup and supply chain disruption. The financial summary highlights two pressing issues: inventory buildup and supply chain disruption. The data indicates a significant increase in inventory levels, with a $98 million rise from December 31, 2024 to September 30, 2025. This surplus is driving down retail new vehicle gross profit per unit, as well as contributing to higher used vehicle inventory days supply. Furthermore, the report notes concerns about supply chain disruptions due to global political and economic factors, tariffs, import product restrictions, and production delays. These disruptions could lead to shortages and further exacerbate existing issues with inventory buildup. Overall, these findings suggest that both inventory buildup and supply chain disruption pose significant challenges for the industry, requiring careful attention and management to mitigate their impact. That concludes the financial summary for SONIC Automotive Inc. Feel free to comment below, and I will be happy to answer them when possible.